Good morning, guys. Welcome to this Thursday, February 20th. And market's just kind of the little movie had high going higher yesterday. It's kind of been reversed back into that 61.40 level. So attempt to take it higher. So far, no success. They're trying though. They are trying. They have been building value at these upper areas. Now, to get started this morning, the news. We get at 8:30, we get jobless claims in Philly Fed. We have Goolsby speaking at 9:30, leading indicators at 10. And we have got the nat gas report and oil report, one at 10:30, and the oil report at 11. Couple of more speakers. Then we have, let me see here, we have a 30-year tips auction at 1. I'm not sure if that much going to do much, but it's worth any of these bond auctions are worth paying attention to, since depending on the outcome, it could be a reaction in the market to it. So anyway, 8:30 and 10 we have news. 11 we have the oil report. So that's what we got to look forward to. Nothing I think is going to be really crazy in terms of moving the markets directionally. So I'm thinking we are in for another range bound day. They're building value here at the upper levels. That's usually a pretty good sign if they're going to get ready to consolidate and getting ready to take this higher. They're going to have to start breaking out at one point, though. Otherwise, someone's going to start taking profits and start knocking this down. But so far, there's been a pretty strong move to the upside, and they're holding on to their gains. So we will start range bound. A slight bias to the upside, if anything, but I would start off range bound, looking to buy weakness, 61.40s, 61.30s, 20s, down to the 10s for rotations back up. I'm going to get short against the 55s and the 65s for rotations back down. I have a pretty good edge right here at the 65s again. So that edge developed yesterday. We have this mode here right below it at the 61. Watch for that one. That can be it's not at an edge, but you can certainly see the market run up and test that specifically without even getting up to that upper level. That would be a high volume node to pay attention to. And it happens more than you think, that they run right up to the mode and then bounce off it. So looking for shorts against that 55 and the 65. Watch that mode at the 62s. They're going to buy weakness at the 45s, the 30s, down to the 20s, down to the 10s. And again, the same three levels as before. If they start trading below the 30s, I'm going to be a little bit less aggressive on buying the 20s and the 10s, but still looking to do that. Any long bias I have is pretty much gone at that point. But they're still looking to buy against these support areas because they could definitely stick in this range. So that would be a reverse retest in this low volume area again. So if that low volume area, the 6110 comes out, one level below the obvious would be the 95s, exactly the same as yesterday. So we'll see where they're going to go, but pretty much the same analysis. They take out the 6110, one level below the obvious 95s. If both of them comes out, bets are off. Then something is going on and we are heading lower. Now there could be short trades on the way down here. So again, they take out the 30s. I would potentially look for potential short trades heading back, testing these support areas. Yes, not right into them. As I keep saying, don't sell into support, don't buy into resistance. And that's why this F2 chart is important. That's what that protects you from. If you're staring at an F4, a fast chart, you have no idea. You'll be looking at something looking like a really good breakout, and you're selling right into a support area and then wondering why everything kind of fell apart around you. So starting off range bound, if anything, with a slight bias to the upside, since we are holding here, slowly kind of grinding, trying to take this higher. If you get weakness, looking to buy against the 40s, the 30s for rotations back up. And below the 40s, taking off any long bias, still looking to buy against the 20s and 10s. And below 95, so bets are off at that point. Okay, so that's the ES to get started. Pretty much the same as yesterday. And we'll see if there's some piece of news that's going to come out. This potentially could change these dynamics. There's nothing scheduled, but you never know when an event drops somewhere. Looking at the bonds and the NASDAQ, bond market is slowly trading higher, trading back up again. That's a good sign. These yields coming down, not kind of falling apart. yield spiking up, if bond prices start coming down hard and the yield starts spiking, that would be an issue. So at this point, we are trading in this high volume area around the 114, 15, 16s. Right now, a little bit on the upper edge. Upper edge is low volume area at the 115s is what we are testing right now. So I would be looking for shorts against, at this point, the 115s, the 115.05 to 6. This level, the 115s they just blew through it a little bit, backed off a bit. So we'll see if that turns into something. It could be that they settle on that 115.01 edge. We'll see. But at this point, the better ones is going to be around about the 4 to 6 level, or if they the 14-15 here, sorry, the 114.30 to 115 ends up holding. But this is up against this upper edge. So starting off, pretty much range bound, looking for some early strength to get short against that 114.30 to 115 and the 115.05 to 6. If that low volume area comes out, one level above the obvious is going to be the 115.12. This 115.05 and the 12 comes out. I think we have a shot at running right up here to the 116s. So that's kind of the way I'm looking at the bonds right now to get started. We'll see. They're pretty much holding in a pretty tight range right now, going back and forth. So settling in, coming to value. We'll see what kind of piece of news is going to move the bond market, especially what direction. A lot of people are thinking that price is going to come down and yields are going to start coming up. But we'll see how that comes out, how it comes together. On the NASDAQ, pretty good move. Yesterday to the upside, but not quite making it happen. So still holding in this upper range in the bigger picture. So watch this lower edge, the 22,080s. That's the one to pay attention to. That one and that little ledge below it, the 30s. So these two support areas, 80s and the little volume edge here at the 30s. So these two areas come out. we can see this retrace all the way back here to this 760 to 800s, 21,800s that is. So that could be a bad day if that happens. Or a bad day, a good day for the shorts. But anyway, so starting off looking to buy weakness, the 170s, 140s, 115s, 22,080s, and the 40s for rotations back up below 80s. I'm going to start thinking about the short side of the market. Still looking to buy against the 40s, but it's at that point, the 40s comes out, bets are off, and then we have retracing back into this lower range again. So stay on the short side if that happens, but still looking to buy early weakness for rotations back up. There's still stuff going on. A lot of the earnings coming out has been pretty good. So see if that can be enough to kind of take this to the next level. We are pretty close to these all-time highs though. So we'll see if they can't start extending to the upside. There'll be some attempt to knock it down. And as usual, nothing ever goes straight up. So they may take it higher and get knocked down a bit. So we will see. But at this point, I'm still range bound, still leaning towards the long side of the market on the NASDAQ, if anything. But I would actually be more range bound than on the long side of this, given that they're in stage 3 on this profile. This move out of the middle has stalled. They're coming to balance. So trade this as a range bound market. I would favor the long sides. I would prefer to buy weakness, same as the ES. But on the way up, looking for shorts against the 225s, the 260s, 290s up to the 320s for rotations back down. And if they take out the 320s, I think we are heading higher at that point. And we may be right up here testing these new highs. So that's how we get started on the NASDAQ. This morning, looking for, let me see, oil and gold here, coming up, oil and gold. New highs in the overnight. There you go. So the overnight is full of surprises. London session, European session up here knocking out the 2970s or up testing it. Now right back down again. So every time they put out a push to the upside, there's volatility and there's that crazy rotations going on. But look at that. They're up here, made new highs, setting up could be a potential breakout here. So if they don't trade down below this volume area, the 260s, the 2960s, so we're right here, they were down here at the 55. So these three support areas are going to be the 63s, 59s, and the 55s. They're trading right in between them now. If these three support areas comes out, we probably can see retracement back to the 45s, maybe even lower. If they hold, then we have a good shot at extending to the upside. So I would start from the long side, looking to buy weakness. At this point, the only thing you got is 59 and the 55s. And below 55s, taking off the long bias, looking for a retracement back to that 44 level, this high volume area. So that's where we are on gold. Look to see if they this little breakout is for real. Sometimes these overnight breakouts they get massively retraced. You can see they start trading higher in the overnight going into yesterday. So it knocked it down. Same as I hit and same today. Yes, question is how far they knock it down, but usually we get a little bit of selling right from the get-go. So we'll see if that materializes today. But I would stay, watch these three support areas, the 55s, especially if that comes out, take off the long bias and go back range bound. At that point, I think they're going to back off the highs. So we'll see. That's a new highs on gold. They're shooting for 3,000, that's for sure. And oil, this is April oil, and we're pretty much holding in a range, backed up, retraced a little bit. See if I can find my oil chart here. The building value right here around the 71. So now you can see how the mean is moving a little bit higher. This is the prior area of volume. But there's still a bulk of the volume is right here at the 70s. So we have been holding right above it. So at this point, we not really see a deal attempts to trade it higher. Just gets back up to this upper area at the 72 to 74 level, and then it gets knocked down. And I think unless we get a big change in sentiment or direction, or no, not direction, but in geopolitical climate, I think the trajectory is to the downside. Now, oil price is a little bit tweaky. I mean, the adage or the saying is like, yeah, the way you get more people into the oil business to look for oil is higher prices, right? So there's a balance. Higher prices attracts a lot of drilling and a lot of people into the oil business producing oil, but that also then turns into more supply, which then drives down oil prices. So it's a pretty good dynamic. I think the oil price is going to be way lower than this, though. It's going to be a lot lower. So I'm just waiting for them to knock out that 67 level and really start retracing back down again. That's going to be a key factor in taking out the Iranian and the Russian funding sources for their wars and their aggression. So that's part of I think that's part of the strategy. So that it's going to happen. The question is how and how fast. But anyway, so at this point, though, oil, I would say range bound. I would say look to sell strength. 72 at this point, trading at 72.30. That's kind of aggressive to get short there, but that would be a short against 72.50, 72.80s for rotations back down. And looking to buy against 72s, 71.70s, and the 71.40s for rotations back up. So that's pretty much in the range I'm looking at. So getting short up to that 72.90, 80 to 90s. Looking to buy, get down to this 71. What did I say? So 71.30 edge. And so looking to buy against the 72s, 71.70, 71.40s, 71.20s for rotations back up again. The trade below that 20 level, I think we are heading right back down into these lows. So that's oil for you. Not the straight line, but that's the trade-off. That's what sometimes makes energy kind of interesting, because you always have it's a very much a supply demand kind of dynamic, and then you add the risk premium for conflicts around the world. All right, so oil, range bound oil, gold from the long side of the market. Watch that 55 level. If the trade below that, we're taking off the long bias. And on the ES, back to the ES, pretty much still where we left it. So we'll see if they can make it go out of this again, or they are going to be right back just holding in the range today. So the news we have coming up in about 10 minutes, it's jobless claims in Philly Fed. We'll see if that has any surprise in it. I doubt it. It's probably going to be pretty much same as usual. So I'll wrap it there, guys. Good trading, and I'll see you guys back at 11:30 for the next update. And let's watch out for these big big rotations. Make sure you have your stops in good spots in case you get one of those moves we got yesterday, where big move up and down, and it just happens super quick. But anyway, we'll leave it there. I'll see you back at 11:30. So good trading.